Rishi Sunak, the UK Chancellor, has just announced on the 3rd of March the UK Budget 2021. And if you are an individual UK taxpayer or an owner of a small business, whether it be a limited company or a sole trader, then stay tuned. In this part 1 of our UK Budget 2021 special series, we will cover a deeper dive into the corporation tax rate changes, income tax thresholds and rates for individuals, a brief look at capital gains tax, VAT and inheritance tax, and finally, the good, the bad and the ugly. You might want to stay tuned for this one. Before I get into today's video, be sure to hit that subscribe button as well as the notification bell to make sure you're kept up to date with all of our latest content. This really helps us to produce more helpful videos and to get you real quality advice from real qualified accountants. So the Chancellor Rishi Sunak has announced an increase in the rate of corporation tax, a tax that is paid by limited company businesses on their pre-tax profits. He has increased the main rate of corporation tax to 25%, currently at 19%. But this will not happen until the 6th of April 2023. So you as a limited company business owner have another 2 years before the changes take effect. And what's more, the new 25% rate is only applicable to limited company pre-tax profits of £250,000 or more. So if your pre-tax profits are only up to £50,000, then your limited company will only pay the current rate of 19% to be relabeled the small business rate from the 6th of April 2023. So what happens with pre-tax profits between £50,000 and £250,000? Well, these will be subject to tapering. This could take the form of something called marginal relief, and this is nothing new. Marginal relief for corporation tax existed up until 2015 before things were simplified. The Chancellor has just simply revived this well-weathered tax tactic. Let's illustrate very simply as to how this possibly will work. For any pre-tax profits up to £50,000, these will be subject to corporation tax at 19%. For any pre-tax profits of between £50,000 and £250,000 will be subject to the marginal rate of corporation tax, which is formula-based and a calculation driven by a marginal rate fraction. A bit of a mouthful there, but not to worry. Any pre-tax profits above £250,000 are at 25%, which will become known as the main rate. Now, with the exception of the 19% and the 25% rates, everything else in between is not yet fully finalised and we still await the detail. We will cover this in one of the next parts of our series on the UK Budget 2021, so make sure you've clicked on the bell notification icon to get the reminder when it is released. Before we continue with today's video, we're thrilled to be launching the Accounting and Tax Academy membership site this year. We'll be posting downloadable resources, tax tutorials, and exclusive courses that you won't find anywhere else. And the best part of it is, it's absolutely free to join. Head to the link in the description box below to find out more. Now, in our view, a little sweetener Rishi Sunak has provided is the carryback of business trading losses. At present, if your limited company makes trading losses, the main thing that can be done is to carry forward those losses into future years, although there is a special election that can be made against total profits of the current year and previous 12 months. From a commercial angle, no company owner or business owner really wants to be generating losses, but with the pandemic and recession we are in, unfortunately, this is probably a reality for some of you business owners out there. So business losses of up to £2 million can be carried back up to 3 years. And remember, this applies whether you're a limited company, sole trader, LLP or partnership, and it applies to losses realised in the 2021 and 21-22 years. Now, why do we feel that this is a little sweetener? Well, let's take a closer look with a simplified example. Most company Mo Limited, a small limited company business, to the year ending 31st of March 2021 generated losses of £50,000. The year before, to the 31st of March 2020, the limited company made profits of £20,000 and paid £3,800 in corporation tax. And the year before that, to the 31st of March 2019, it made profits of £60,000 and paid £11,400 in corporation tax. Now, under the current rules, the £50,000 of trading losses would be parked and used against any future profits, if future profits ever happen at all. In this example, the risk Mo Limited takes is that if the business continues to make losses or makes profits way below £50,000 in the future, then it could take Mo Limited years before the full financial benefit of the £50,000 of losses are received. Under the new system, Bob can actually go back up to 3 years and use the £50,000 of losses to get his limited company a tangible refund of historical corporation tax. In this case, he will use £20,000 of the losses against the previous year's profits of £20,000 and claim a £3,800 refund from HMRC. And now under the new rules, the remaining £30,000 against the £60,000 from the year before, providing the company with another £5,700 refund. Mo Limited will get a total refund of £9,500, valuable cash flow he can re-inject back into his business. And finally, Rishi Sunak announced a business investment super deduction valid for the next 2 years. We'll cover more on this in a future video once the finer detail has been released. So make sure to subscribe and click on the bell notification icon to be reminded when it's released. Let's just remind ourselves what the current 2020-21 tax year income tax thresholds and rates showed on the screen are. So the Chancellor increased the personal allowance to £12,570, an increase of, well, £70 per year. And this is from the 6th of April 2021, lasting until the 5th of April 2026. And for the higher rate, the threshold will increase to £50,270, an increase of £270. And again, this will be from next year, from the 6th of April 21 to the 5th of April 2026. So why has Rishi Sunak frozen these thresholds up to the 5th of April 2026? Well, this is something called fiscal drag, and it is a more subtle way of increasing taxes in real terms. Some commentators actually call it a stealth tax. In effect, the Chancellor is banking on the economy to start recovering, and in a couple of years, the recovery should be well on its way. In theory, at least. With this, inflation should start pushing up your salary, wages, and earnings, and as a result, more of you will get dragged into either the basic rate band, higher rate, and upper rate bands, resulting in, you guessed it, higher actual payments of tax by you. The increase will be very, very subtle. You may not even notice it much, but multiply these small increments across 33 million or so earners subject to income tax in the UK, and it all adds up quite nicely. Who's a clever boy then? There was a lot of fear that capital gains tax allowance will be reduced or even taken away, but it remains intact at £12,300 and is set to remain frozen until April 2026. And according to reliable sources, it seems many of the capital gains tax reliefs have remained unchanged. However, we'll be updating you on these in the next part of this series. The inheritance tax nil band threshold remains intact at £325,000 per person, and again will remain frozen until April 2026. The pensions lifetime allowance of £1,073,100 also remains intact, and finally the VAT registration threshold will remain at £85,000 until April 2024. Now, as always, let's start with the good. By the 31st of March, applications for the Business Bounce Back Loan and equivalent schemes such as CBILS will actually cease. And in will come the Recovery Loan Scheme. Applications can start from the 6th of April 2021 up until the 31st of December 2021. And judging by the Chancellor's tone, this loan scheme should be open to all small businesses, whether a limited company, sole trader or LLP from any sector. Loans will start from £25,000 with no personal guarantee up to £250,000. So at first glance, the feel is that it could have similar terms to a business bounce back loan, with the government guaranteeing 80% of the loan. Follow the link in the description box below to find out more on this. And now for the bad. In our opinion, we should not be fooled, as there is a high probability of further tax increases in future budgets. Just because the Chancellor has not rocked the boat too much this time round, it does not mean he won't pull the necessary levers in the future. Our take on this is that he will hope the changes begin a stimulus of the UK economy to coincide with the lifting of lockdown gradually. And once the wheels of the economy are spinning faster, to implement tax rises at the right time when you feel more financially secure and confident. And whilst interest rates are at an all-time low, the government can manage the huge debt mountain the UK currently has. But how long can interest rates remain this low? This is the big question. And finally, the ugly. As a heads up, the Chancellor announced an additional £100 million to fund a special HMRC task force to not only combat but also to unravel and bring to justice COVID-19 support packages fraud, tax avoidance participators and outright tax evaders. And they're getting smart about it too, including upgrading their technology and forcing information from digital platforms on your activity. Given the pressure on the government to repair public finances, this is certainly a low-hanging fruit basket for them. I hope this video has helped you understand some of the changes in the UK Budget 2021 in a bit more detail and taking you one step closer to knowing your numbers. As always, let us know in the comments your thoughts on today's video or if there are any topics you'd like us to cover in the future. Finally, be sure to like and subscribe as this really does help us to get our content out there. This is Tony D'Angelo for the Accounting and Tax Academy. Thanks for tuning in.